How does this keep happening? How does 3 out of the 4 largest bank failures in US history happen and all of a sudden normalized? We are told time and time again by the Treasury Secretary, by the Fed, by the White House that the banking system is sound and resilient. And how do big banks like JP Morgan and by extension oligarchs like Jamie Dimon keep getting first dibs on these bank failures? On Monday, May 1st, JP Morgan came in and swallowed up First Republic Bank. JP Morgan is now responsible for 3 of the largest bank takeovers in history. In 2008, they swallowed up Bear Stearns, Washington Mutual, and now First Republic Bank. And here's the crazy thing. There's a regulation that limits any single bank from holding more than 10% of all US deposits. However, JP Morgan now holds $3.7 trillion in assets, which equates to more than 14% of all US deposits. Think of that, by one bank. And they needed a regulatory exception in order to do so. However, it was given up so easily. How does the policy of too big to fail, which after 2008 we promised ourselves we wouldn't lean on anymore, how does that continue to dominate the corporate landscape? And how do insiders like Congresswoman Lois Frankel and executives at First Republic, how do they get to offload their shares before the catastrophe is made public? There are so many facets to this story and this ongoing story here, and I'm not really sure why I'm making this video besides to hopefully educate some of you on the whole picture. Not only the insider selling, but the seeming oligarchy of Jamie Dimon, the fact that no matter what financial catastrophe this country or the globe suffers, we continue to do the same things over and over again. Like, how is JP Morgan not too big to fail now? What if, because of these interest rate hikes, something breaks in the system and we find that there is something beneath the layer of JP Morgan that is cause for concern, and now they hold 14% of all US depositors money, right? Like, what happens if JP Morgan for some reason fails? I'm not saying there's any reason to believe that now, but now we are putting them at risk because they are too big to fail. And why was JP Morgan the bank that was invited to take over FRC, right? Like, obviously there is a shadowy relationship between JP Morgan and the government, but you can even argue with that much money in assets that they are more powerful than some branches of the government and maybe the Fed itself. I mean, the assets that they hold are not that far off from the assets that are held by the Federal Reserve. But if you track the markets like I do, this ongoing story is important because obviously these are not the signs of a sound and resilient banking system. These aren't the types of things that you want to see when we are on the cusp of an impending recession, and the fact that the Fed just raised interest rates today as of the time of this recording. Once again, although they will likely pause here, but they will keep them higher for longer, hoping to get that inflation down, and they will break whatever they need to in order to get there, right? So you don't want to see these bank failures happen time and time again. And as a matter of fact, while I'm recording this, we are on the verge of another bank failure. PacWest is down. Its stock price is down 40% after hours. And what the fuck? Like, how coincidental that this story just comes out as I'm recording this, right? PacWest is weighing strategic options, including possible sale. Now, in this video, I'm going to jump into all the stuff I just discussed. I'm sorry for the long preamble, but let me just look up PacWest assets real quick. All right, PacWest assets total 44.3 billion. So in the grand scheme of things, this, if they did fold or they failed, that would be 4 of the largest 5 bank failures because it would rank above IndyMac, right? 4 out of the 5 largest bank failures, if PacWest fails, would have happened in 2023. We've already seen 3 out of 4. Washington Mutual happened in 2008. All right, let me get into all this. But before I do, make sure that you follow me on Twitter and Instagram, where I post daily free trading and finance content, including trade ideas, investment ideas. I posted an idea for the 2-year futures. I said when the Fed pauses, that is something that you definitely want to get into, or at least not financial advice. I'm going to get into it, but it's just an idea for you guys to take a look at. And if you guys want insider access to all of my analysis, all of my trades on a daily basis, as well as courses on how to trade options, how to day trade, we are also releasing a futures course coming up soon. Super excited about that, as well as our regular weekly trading masterminds. Link is in the description below. Make sure that you book a call with one of our ambassadors and they will get right to you and tell you if you are approved. Let's get right into the video. All right, so real quick, how did First Republic's failure happen and how did JP Morgan get involved? Well, it's basically just a bank contagion. So after Silicon Valley Bank folded, then a lot of other regional banks, especially that had a similar customer profile as Silicon Valley Bank, were also under risk. And so we had depositors pulling their money out of these regional banks, putting them into big banks. And basically what started the regional bank contagion was that some of these regional banks had bought treasuries, right? Because obviously they were told that treasuries are are the safest investment, but they bought these treasuries largely before the Fed started raising interest rates. Now, what happens when the Fed raises interest rates? Well, the value of old treasuries go down. And some of these banks didn't even have a risk manager or a risk officer. And if they did have a risk officer, then that risk officer was sleeping at the wheel, because somebody who makes YouTube videos can easily see and tells you on a regular basis that when interest rates go up, the value of treasuries go down, right? I've told this story before, but I remember in December 2021, my money manager, the bank that I bank with, called me up and said, hey, are there any changes that you want to make to your portfolio? I'm like, well, what do you advise me? Because you are a money manager. And she said, we advise that in 2022, we still believe in bonds. And I said, how could you believe in bonds when the Fed is going to raise rates? Sell my bond portfolio. I said, how much do I have in bonds? She said about 25%. I said, sell my whole bond portfolio. Why would I want that if the Fed is going to raise rates? And she said, we still believe in bonds for 2022. You know what? I would probably be standing in the employment line somewhere if I had trusted her. Okay. So money managers are not the end all be all, and certainly risk officers aren't. And by the way, I'm not beneath the job or standing in an employment line. I'm just saying my whole profile would have changed instantly if I trusted her. So First Republic Bank clients withdrew more than $100 billion in deposits, and they uncovered this on April 24th. They are a public company, and so they have to disclose everything as soon as they know it. If you're a private company, you don't, but they're a public company and they're traded publicly on the stock exchange. Now, First Republic Bank at this time was worth around $20 billion, right? So what did JP Morgan do? They wrote a check of $10.6 billion to acquire First Republic Bank's assets. A sweet deal, if you ask me. More on this later, because this definitely benefits JP Morgan. They're not taking on, a liability here. They paid half for an entire bank. And how much in deposits? Let's see. JP Morgan is getting about $92 billion of deposits in the deal. And it's estimated that this deal will add about $500 million worth of additional profit to JP Morgan annually. So how did JP Morgan actually get this deal? Well, let's look at the words from Jamie Dimon himself, the CEO of JP Morgan. He said, our government invited us and others to step up, and we did. This acquisition modestly benefits our company overall. It is accretive to shareholders. It helps further advance our wealth strategy, and it is complementary to our existing franchise. Funny enough, even as this bank is the third out of 4 of the largest bank failures that we've seen, he says the banking system remains sound and resilient. Sounds like a parrot at this point. So our government basically handed JP Morgan the keys. And remember that regulatory exception that I was talking about earlier, where a bank couldn't hold more than 10% of all US deposits? This is from Breaking Points, one of my favorite independent news sites. Let's see this video talking about that regulatory exception, this small part of this video here.
It's going to be even more so. I was reading from the Financial Times, if they were to win, it would need the U.S. government to actually provide an exception to a rule preventing any bank from making an acquisition providing it with more than 10% of all U.S. deposits. JP Morgan, the nation's largest bank, is already above that cap, so they would need another exception in order to do this. And of course, it would put CEO Jamie Dimon at the center of a national banking crisis for the second time.
It's actually the third time, because it was Bear Stearns, Washington Mutual, and now First Republic Bank. But that's the exception that I was talking about. And obviously, they already got that exception just like this. And as of Monday, all of First Republic branches woke up and they were magically all of a sudden converted into JP Morgan branches. Now, is this a moneymaker for them? Yes, of course. We went over some of the numbers, but let's listen from the GOAT, Mohamed El-Erian himself, about this deal.
Moved the needle in a major way. But look at what JP Morgan acquired. First Republic was one of the most envied banks. Why? It had very rich depositors. It was able to make jumbo mortgages to very creditworthy clients. And it had what was viewed as the best client experience, the best customer service. All that is now acquired by JP Morgan at a cost that's only marginally more than what they would have lost in their deposits, okay, that they had put in First Republic.
All right, so there you have it. And then obviously we have Congress people taking advantage of this. Congresswoman Lois Frankel sold First Republic Bank in March before the stock dropped 80%. After she sold First Republic, she bought JP Morgan Chase, which just bought First Republic. And I already showed the screenshot, but here are the dates and all of the executives of First Republic who sold shares before this happened. Now, admittedly, some of these are not large numbers, but some of them are. I can't definitively say that these are related to the fact that that First Republic thought that they were going to go under. I think they obviously, being in this industry and being First Republic themselves, probably sensed some jitters, and then we started seeing that selling. But I can't say that they knew that they would get sold to JP Morgan before these sales just based on the amounts. But still, it is something that we do have to keep track of and question every single time. What's crazy is that if you or I walked down the street to 7-Eleven and stole a 6-pack of beer, we'd get arrested, right? But this shit happens whether it's people messing around with the financial system like in 2008, lying about the credit ratings, bringing down banking systems, whether it's, you know, Jamie Dimon acting like an oligarch or insider selling by politicians or insiders. It seems like nobody ever gets even questioned about this stuff publicly. And now we have JP Morgan at 14% of all US deposits, literally too big to fail if anything happened. The government and the Fed would have to step in and rescue JP Morgan just because of how much of the US public's money they control. And we never learn. Like, we never learn. And finally, what are the implications for the economy and the stock market? Obviously, regionals are still at risk, and they have to say that the banking system is sound and resilient because they want to stop the contagion. Now, they've promised to backstop all US depositors' money, but that doesn't mean that regional banks are safe from failing and then being swallowed up by big banks, right? Big bank take little bank. So in my view, this isn't the last of the bank failures, and this is something that is concerning because you cannot have bank after bank failing without there being some sort of larger implication or some sort of over leveraged situation beneath the covers that ends up exposing itself and being some sort of black swan event. This just cannot continue to happen without it affecting or at least threatening some sort of large credit risk in either the corporate credit sector or the consumer credit sector or both. It's just, do I know what that is? No, I'm not Nostradamus, but I know when something smells dangerous, and there's definitely smoke here. If there wasn't, Jerome Powell wouldn't come out today. Today was the FOMC meeting as of the time of this recording. He wouldn't come out and, you know, before even mentioning anything about the interest rates or about the economy, he wouldn't come out and give a preamble about the banking sector, even when he wasn't asked about it. These were literally his first words.
Before discussing today's meeting, let me comment briefly on recent developments in the banking sector. Conditions in that sector have broadly improved since early March, and the U.S. banking system is sound and resilient.
So he said the U.S. banking system is sound and resilient. And meanwhile, today, the same day, PacWest tanks 40% after hours and now says that it's weighing strategic options, including a possible sale. Anyway, traders, I hope you guys got something out of this video. I don't really like making these videos because of the heavy topic, and it's really just a lot of the stuff is enraging. But I do think that there is a duty that I have upon myself with this platform to try to educate you guys on what's going on the best of my abilities and collate this information in a digestible format. It also helps me keep track of what's going on in the market. But at the end of the day, same shit, different day. Leave a comment down below. I'm really curious to hear your thoughts about the situation. I'm really curious to hear what your take is, whether you think this is a big deal or not. Really curious to hear whether you learned something new about these revelations here. Leave a thumbs up if you got anything out of this video, and make sure that you click that link in the description if you want to be a part of the Traveling Trader Academy. You want the inside scoop on my analysis, my trades, etc., what I'm looking at, what I'm trading, what I'm investing in. And you also want access to the masterminds that we do on a regular basis where we go over trading and investing topics. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.